Alright, so it's been a short period of time since we previously checked out the Bitcoin logarithmic growth curves, and since the last video we have broken below one of our lowest Fibonacci bands and we are heading down to the lower deviations in the Bitcoin logarithmic growth curve. So for this video I'm going to be doing a microdose. I'm going to be giving you an update of where I think Bitcoin is going in the eyes of the logarithmic growth curves. Now, if we check out the Bitcoin price before we do hop over to the growth curves, you can see that Bitcoin is breaking down as of the time of recording this. We've been beaten down the dumps for the past couple of days, and as of the time of recording this, we're hovering around that $36,000 level. Now, what is so important about this $36,000 level that we're at right now? Let's jump right into the video. Well, if we look at your Bitcoin logarithmic growth curves, you'll notice there is a plethora of trend lines all over this chart. And what does this mean? Why do we use the Bitcoin logarithmic growth curves? Well, as Bitcoin is exponentially growing, it makes sense to put Bitcoin in a logarithmic growth curve so you can better understand the price cycles, and it will put more weight in the initial distributions that we had to start with. So you can really see, we've got these big cycles on the log growth curves. And like I said, the reason why we do this is because it puts more weight in the initial distribution of the price back in previous cycles. And if we zoom out on the standard Bitcoin price, you can see this is very different from the logarithmic growth curves. In fact, if we look here, you can see, the bull cycles in 2011 and 2013 are basically, well, they're not included in this chart, but the whole data from 2014 onwards is completely flat. And if we look at the Bitcoin logarithmic growth curves from 2014, you can see that it's not flat. We have these bumps, we have these peaks and these troughs in the market coming up to the next market cycle. So one reason why we look at the Bitcoin logarithmic growth curves is to understand, in terms of the Bitcoin growth curves, where we are sitting in the market. Now, historically, we normally always bottom at the low deviation, which in mathematical terms simply means one deviation of the average price oversold in the market. And on these growth curves as well, you can see we typically top out in one deviation overbought. So on this chart, they call it high dev and low dev. For me, I'm just going to be calling it one deviation overbought when we do reach the top and one deviation oversold when we do reach the bottom. Now, if you do look at this chart down here, you can see these go hand in hand. You can see once we become topped off on our oscillators, this is when we reach one deviation oversold. So historically, every time we reach this one deviation oversold, whether it was in 2011, whether it was in 2013, whether it was in 2017, or we didn't quite make it to one deviation oversold this market cycle, but you can see the top of where we topped out on the oscillator, which was 0.74, was the exact top up here. So historically, you come up to the higher deviation bands, and that is normally when you have a top. And also historically, when you come down to these lower deviation bands, that is historically when we normally bottom. So we look at this logarithmic growth curves to give us an idea of where we are in the macro market perspective. And like I said, if we look at this chart, every time we've come down to this one deviation oversold, it was the bottom in this market cycle. If we draw it over to the next bear market bottom, you can see this was the bottom in this market cycle. If we draw it to the bottom of this bear market cycle after 2018, you can see we literally topped out just on the one deviation oversold. Now, the data doesn't always top out on the one deviation oversold. You can actually see there was one time where, well, technically two if you want to incorporate this small wick to the downside of the one deviation oversold, and technically three as well if you want to call it that, but I would only really focus on this one big move that we had below the deviation. And you can see one deviation oversold was 7,400, and we actually came all the way down to approximately $5,000. At least on this chart. It is different on some exchanges. Yes, I do know some of the bottoms were between 4,000, around about 4,000, but on this chart, we're just running off what we've got here. So as you can see, this was the only time where we've really broken below one deviation of the price. And as you can see, we broke down on the 11th of March and we were out of here by late April. So this took less than 2 months below one deviation oversold, and once again, after we did find this bottom on the one deviation oversold, a month and a half later, that was when the bull run started and we were off to the races. So why is this important in correlation to today's price? Well, like I said, if we simply look at where we are, this chart sums it up very nicely. You can see when you come up to these higher price levels, or higher oscillator levels rather, should I say, because we're talking about this in terms of the deviations overbought or oversold. When you come up to the higher levels on your oscillator, it's historically always the top, and when you come down to the lower levels, it's historically always the bottom. And when we zoom into what we've got going on right now, what's very interesting is, like I said at the start of this video, we were sitting at 36,000 as of the time of recording this. Why is the 36,000 level so significant? Like I said, you can see this logarithmic growth curve is filled with deviations. We've got at the average deviation in the middle, one deviation overbought at the top, one deviation oversold at the bottom, and then we have a plethora of Fibonacci bands between them. If we zoom into the price right now, you can see we just broke down from the lowest deviation band. And where is the lowest Fibonacci band? It's down here at 37,700. And what price are we at right now? We are at 36,000 and counting as we do move down. So in my opinion, at least looking at Bitcoin through the eyes of the logarithmic growth curves, it would make sense, at least historically from a historical perspective, for us to come down a little bit further, potentially to as low as the low deviation band. Because like I said, historically, every single market cycle bottom, whether you're talking about the first bear market, we perfectly touched the low deviation. Second bear market bottom, perfectly touched the lower deviation. Third bear market bottom, perfectly touched the deviation. And you know, I'm calling this like a bear market bottom as well. It is pretty much the same bear market bottom, but I'm just talking about these macro troughs that we have in the market. And as you can see, when we did bottom, we bottomed just below the low deviation. So out of all the data points we have in every single market cycle in Bitcoin, we always historically bottom at / slightly below the lowest deviation band. And where is the lowest deviation band coming in right now? Well, one deviation oversold on the Bitcoin price is coming in right now at 32,400. So what does that mean for Bitcoin? Well, if we look at the Bitcoin price, you can see the wick that we've got down here is all the way down at 33,000. And in my opinion, which doesn't necessarily line up with the logarithmic growth curves, I do think 33,000 or just below it will be the bottom. But according to the logarithmic growth curves, 42,400 could be the potential bottom. And like I said, I mean, at least historically, we've always come down and literally perfectly touched it. I mean, you can see here, technically the low deviation on this bottom was 212 and we came down to 215, but you get the picture that I'm trying to paint here. So, I mean, we could move down to 32,400. I really don't think we should quibble about, you know, is Bitcoin going to move down to 33,000 or is it going to move down to 32,400? In my opinion, they are both perfect areas to DCA into the market, and this is where I do personally plan on doing all my accumulation down here. So I'm going to be DCAing around the $33,000 range, and I will be DCAing if we do come a little bit lower. You can see from where we are now, this would approximately be another 8 to 10% drop on the crypto markets. And I did just make a video on Bitcoin through the eyes of the stock market. The dollar is kind of just chilling out, the stock market is dumping, and a lot of these stocks are breaking below very important levels. So there seems to be a lot of confluence in the market coming down to these lower price targets. It does seem like we are going to move down at this point in time. Like I said, is this the right time to sell? Should you be selling at, you know, 36,000 in hopes that you can buy back at 33,000? Well, if you're asking for my opinion, I would absolutely not do that whatsoever. I think that is a poor decision. I think it makes sense to dynamically DCA into the market as we break down from these lower, as we break down, you know, as we come down to these lower fib bounds. At least my trading plan is to DCA every time we move down a Fibonacci band, and I did DCA into the market when we came down into the 36,000, and like I said, I will be DCAing into the market when we come down to one deviation oversold. So that is an update on the Bitcoin logarithmic growth curves. There is a lot of confluence in the market, you know, specifically in the stock market. You know, the interest rates coming in right now, everyone's getting a lot quite bearish. The dollar is very near its top, and there's a lot of signals lining up that we could just have one quick flush out before we do have our next bear market bottom. Like I said, I don't think we'll be going lower than 33,000. According to the Bitcoin logarithmic growth curves, the bottom is going to be coming in at 32,400. Like I said, would I be arguing or quabbling over a $600 difference in the price? No, I absolutely wouldn't, because you can actually see this band down here is actually coming in at just below 33,000. I believe 33,000 is a huge psychological level as well, and I do also believe it would make sense if we potentially came down to exactly 33 and put in technically just a slightly higher low, and then that would kind of confirm the bottom, in my opinion. Well, that is all I've got for the Bitcoin logarithmic growth curves. I hope this video was useful to you. I hope you found value in it. That is all I've got for the Bitcoin logarithmic growth curves. I'm probably going to make a few other macro Bitcoin updates today, checking out what is going on in the market from a range of different perspectives. All I've got for you today, as always, not financial advice, cowboy out, and most importantly, peace.